Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets are back in the green as technology and banking counters lead the benchmarks higher. Government appoints non-executive chairpersons at 3 state-run banks based on recommendations of the bank's board bureau. Jet Airways is down more than 7% in trade today after the airline posted a surprise loss. The auditor has also raised concerns over cash flow. Higher sales could not cushion Tata Motors' performance in the fourth quarter. Stock falls over 6% as profit halves. Situation remains tense in Tuticorin as the state administration shuts down internet in the area. We'll get to all of that in a moment, but let's take a quick check at how the markets are faring. Technology stock seems to have gotten some momentum. The benchmarks are relatively all right today. Neeraj is here with some of the closer movers.
Yeah, you said it all, Harsha. Yeah. Good afternoon. So, exporters it is. Technology to an extent. Select pharma names too haven't done too badly. I don't know if this is courtesy the rupee or otherwise, because because there's apparently no other reason, but Nifty Pharma, technology, both of them seem to be doing rather well for themselves. And unlike yesterday, metals don't have as steep a gash, and OMCs don't have as steep a gash as they did yesterday. So the losers' contribution is also slightly less. The metal index, which was down and out in trade yesterday, is up about 0.5%. OMCs are down, yes, but not as down as or not as low as they were in trade yesterday. So all of this is helping. Tata Motors, though, has caught in the eye of a storm, 6.5% down after what's been a disappointing quarter yet again. And the cheapest auto index name continues to get cheaper every single quarter over the last 1 year. So that's a sad story for them. But that aside, volumes are okay at the broader end of the spectrum. Certain paint companies seem to be doing okay, interestingly. So Berger Paints is up 2.5%. Shalimar, which came out with a very disappointing quarter, is up about 14%. I was trying to see if Asian Paints has done that. That's not been the case. But it's obviously the smaller paint companies which have done okay. And result reactions have been evident in today's session as well. TD Power, bad numbers. Stock is down 8.5%. Shalimar, notwithstanding a couple of others like Eros International, fabulous numbers. Stock is up about 12-14%. So stock-specific moves in the session today.
Interesting that, Neeraj. Thank you. Let's move on. The government has appointed non-executive chairs for 3 state-run banks today. A tweet by the Financial Services Secretary Rajiv Kumar suggests that this is a move towards clean and responsible banking. Neeraj Ori is standing by with more details.
The government has appointed chairpersons for 3 public sector banks, namely Punjab and Sindh Bank, Dena Bank and Central Bank of India. Dr. Charan Singh, who is the former senior economist at IMF, would be the non-executive chairman for Punjab and Sindh Bank, and Ms. Anjali Bansal, who was the former managing editor at TPG Private Equity, would hold the same position at Dena Bank. Former Corporate Affairs Secretary Mr. Tapan Ray would be the non-executive chairman and non-official director at Central Bank of India. Now, these appointments have been made based on the recommendations that were given by the bank's board's bureau, which is currently being headed by Bhanu Pratap Sharma, and in line with government stance that it would maintain an arm's length distance when it comes to bank appointments. Now, the Financial Services Secretary also tweeted that this is a move towards separation of post of chairman and managing director for the better functioning of public sector banks, and this is being done in line with global best practices and as per the guidelines of Companies Act.
Thanks for that. Let's move on. Another company that's had a turbulent fourth quarter is Jet Airways. The country's oldest private air carrier posted a surprise loss after factoring in a one-time maintenance charge and an impairment loss for subsidiary Jetlight. Darshan's here with the details on what the auditor has made some strong observations this time around on Jet. Darshan.
Yeah, so basically the numbers, if you're looking at the top line, is pretty much in line with, what growth in terms of what SpiceJet and Indigo did, but it's where operationally Jet failed, because if you're looking at the EBITDA margins, that came in at a -3% and a loss of 1036 crores. So what this loss essentially means that this is the first time that the company posted loss after 11 straight quarters of profit. And in this one loss itself, they've wiped out profit for the past 6 quarters. So clearly a big loss that has come in. Mainly what company has said is that, because of the loss that the company has incurred, they right now have a negative net worth, and that as of 31st March. And this loss in net worth can create a lot of uncertainties. They're trying to do a lot of stuff on their side, taking various initiatives in terms of cost rationalization, optimum revenue management. But the auditor himself is saying the fact that, the appropriateness of assumption is dependent on realization as far as these various initiatives is concerned. Now, there were two reasons why optimally they didn't do well. First of all, the fuel expenses have gone in from levels of 1,580 crores all the way to almost 2,063 crores. So that's a big jump that's come in. And secondly, other expenses, especially in terms of forex and advances to Jetlight, that has moved from 1,200 crores right up to 1,800 crores. So that's another big jump. So if you compare what has happened with Jet, Indigo, and SpiceJet, while Jet has posted the highest revenue among all three, they are the only one that has posted a loss this time around. Rest the other companies on a similar revenue. Indigo's posted a profit of 2,000 crore, and on 1/3 of the revenues, SpiceJet has posted a profit of 560 crores, while Jet Airways has posted a loss of almost 700 crores.
Okay, those are the numbers of Jet. Darshan, thank you so much for that. That stock has taken a knock in trading today. MSCI, meanwhile, is concerned about the dispute between NSE and SGX. MSCI CEO Henry Fernandez is concerned that this may leave international investors with no easy way to hedge their exposure to India. In an interview to Bloomberg earlier today, he said he welcomes India developing trading onshore, but not at the risk of killing offshore trade. He, however, started off by talking about China's debut on MSCI. Listen in.
The market didn't know exactly how many stocks we're going to include.
Right.
The issue at the last minute is always what stocks were suspended, what stocks are not suspended, and therefore to make sure we have the final list. So far, people are excited about it. We haven't had any pushback, any negative comments by anybody. So. Which is, unexpected sometimes, because at this time of the,
right.
of the process, people say, wait a minute,
Everyone has an opinion.
Yeah, absolutely.
And you mentioned that this is a significant step, but it's a small step, right, for China, particularly in opening its markets. But already people are asking, okay, so if they've got a certain portion of weighting now in the index, when are we going to see an increase, and what is it going to have to take to see that increase?
Well, at this point, we're very much focused on making sure next week goes well, that the August second half goes well, by the end of August, beginning of September, and we're beginning to obviously think about what else will happen next.
Right.
But most of our attention is making sure that this happened correctly, that we do consultations with our clients after the first phase. Do you see everything you expected? Were there any issues? Is there something that we need to be concerned about? And also to do the same in the second, step,
right.
At the end of the summer. So yes, we started thinking about what are the other areas that needs to improve in order to get to the second leg of this, but it's too early to tell right now.
India is another issue that is top of mind for many of our viewers right now, and I know MSCI has warned India about the weighting on its indexes, right, given this recent move, quite anti-competitive, saying that they're basically going to cut off any overseas licensing deals, to trade basically on other exchanges. How was your review so far going on India?
Well, we're concerned quite a lot on monitoring the situation, because in a world like we live today, which there is so much competition for capital all over the world, and most countries, if not all countries, opening up and letting the free flow of capital, from China to Saudi Arabia, which a lot of things are happening in the country,
right.
To also the countries that could have been tempted to put restrictions, like Russia during the problem with oil, and Brazil and Mexico and other places. Nobody is talking about putting restrictions about trading. In this case, India is, and they're saying no, we need to bring that trading onshore. When we don't have a problem for them trying to develop trading onshore, we welcome that.
But just
we like
not
that.
Restrictions
but
like
not kill trading offshore.
Right.
If it's so said it differently. I understand what they're trying to do. But there are a lot of different ways to do it that are not anti-competitive.
So it's perhaps a reasonable objective, but the wrong strategy or tactic to go about doing it. So what kind of moves are you considering then against India? What are you leaning towards right now?
Well, the step that is important to us is always monitor and consultations with our clients, and try to understand how our clients view the moves. And particularly, a lot of our clients use derivative instruments to overlay strategies to what is called equitize, meaning going to the market in futures before you go into the cash market, into the equity market, or the like. So therefore, a lot of these moves are pretty onerous. Now, we have no part in those moves directly, meaning there are no financial instruments that are severely affected, in MSCI. But to us, it's a matter of the principle and the methodology and the accessibility of a country. That to foreign investors, if foreign investors want to access the country through active management, maybe because picking stocks. Others want to do it through replication of indices, called passive management, and others want to do it either temporarily or for a longer period of time through derivative instruments. So retail investors sometimes access a market through structured products, and they buy those structured products outside of the country. Some of them do it through listed options, listed futures.
That's the CEO of MSCI expressing concern over NSE's standoff with SGX. Let's move on. The U.S. Federal Reserve is on track to hike rates in June. Officials said they would welcome a modest overshoot of their 2% inflation target, but stop short of hinting at a faster pace of hikes. Kathleen Hayes of Bloomberg News reports.
I'd say the top of the list is the sentence where the Federal Open Market Committee, the FOMC, basically makes it look like a slam dunk. It's a sealed deal. There will be a June rate hike. Let's read the exact words of what they said. Most participants, that means there was probably only Jim Bullard from the St. Louis Fed, who doesn't think the Fed should be hiking rates at all, agreed or judged that if incoming information broadly confirmed their current economic outlook, strong labor market, more investment, fiscal stimulus coming, it would likely soon be appropriate for the committee to take another step in removing policy accommodation. Now, the other thing so interesting, and another sentence that people took a lot of meaning from, is the one where they say in the minutes what they've said publicly. They're really not declaring victory on inflation yet, even though it has just now touched 2% on the key measure for 1 month. Here's what they said. It was also noted that a temporary period of inflation modestly above 2% would be consistent with the committee's symmetric inflation objective, could be helpful in anchoring longer-run expectations at a level consistent with that objective. Sounds dovish, doesn't it? Because they're actually going to say it's helpful to have inflation above target after it's been so long. People said this was dovish. Bloomberg Economics says Jay Powell, the Fed chair, is probably in the 3-rate hike camp. No mention of emerging markets. That's interesting. Seeing what we've seen in Turkey having to boost their key rate by 300 basis points to support a plunging currency. Their president, Erdogan, opposing these kinds of moves. That's the kind of thing that if it were to spread into emerging markets more broadly, maybe the Fed would take notice, Betty. But for right now, much more focus on inflation. Not a problem if it's starting to rise. Positive on growth, but no sign the Fed's in a hurry to go from 3 hikes this year to 4.
Kathleen Hayes reporting on the possible Fed rate hike. Once the darling of foreign investors, Indian bonds have now fallen out of favor. And according to Europe's largest asset manager, the situation may last as long as a year. Karthik Goyal of Bloomberg News is here with a little more on what Amundi is take on Indian debt is. What's the view? I mean, obviously, in the last 6-8 months, the view on Indian bonds has swung 360 degrees.
True, yeah. There seems to be no relief on the horizon. There's absolutely nothing on the picture which would indicate there's some relief coming for the Indian bonds. And in the top of it now, we have oil prices holding at near $80 a barrel, which is a bad news for fiscal deficit, which is bad news for government's finances, inflation, and all that. So, bonds have fallen for 8 out of 9 months. And for May also, yield has gone up by something like 10 basis points.
So does Amundi have a similar view that this weakness is going to prolong for a while? And is this the majority view on the street?
Absolutely. Now, everybody's saying that sovereign Indian bonds touching 8% level is just a matter of time. And after that, a lot of factors will determine the trajectory of sovereign bond yields. But there's nothing positive on the horizon as of now which would suggest that there could be some relief rally or a reversal in the bearish outlook on the bonds.
Okay. Let's talk about the rupee as well. Karthik, the fact of the matter remains that oil prices have had a bearing on pretty much all asset classes. Rupee is also taking it on the chin. But there's also a view on political risk premium that at least one brokerage seems to believe is going to influence the trajectory of the rupee. What's the view? So
after the Karnataka elections, there's a view emerging that is there some kind of a dent to Prime Minister Narendra Modi's popularity. That is a view emerging. So as that view is taking hold, there's a concern that the government may resort to more spending to woo the rural voters, and that might lead to wider fiscal deficit, again then deteriorating the economic fundamentals, and hence all these things are coming together with a lot of brokerages saying that 70 on the rupee may be a possibility in the coming days.
We'll leave it there, Karthik. Thank you so much indeed. The rupee has been weakening 68, over 68.50 level, 68.38 today. But that's the rupee. Weakness continues. The market believes that it is headed even lower. US President Donald Trump is back to looking at imposing higher tariff on auto and auto components imports. Nearly 25% of cars sold in the United States are imported, and this may also prompt countries like Mexico and Canada to hasten the NAFTA re-agreement. Jody Schneider of Bloomberg News lists out the details.
The U.S. had wanted to move them ahead at various points. And of course, there's been divisions between Canada, Mexico, and the U.S. The U.S. has wanted a lot of things that would benefit the U.S. that wouldn't necessarily be advantageous to the two other partners in the talks. So they've been going slowly. This looks like it is now a way to try to leverage the U.S. concerns and to say, hey, we could take some other steps. The aluminum and steel tariffs were also meant to do that. Mexico and Canada were exempted from those as a way to try to push again for the talks. So this seems to be one of the reasons to do this. But again, these would affect other countries, and European partners are very concerned about this and have been expressing concerns about the tariffs. Everyone thought, okay, there was going to be a deal now between China and the U.S. And this also complicates those talks.
Let's move on. Faced with new questions about whether it's a monopoly, Facebook is making a bold argument. Owning so many communication platforms helps it keep users safe. On Tuesday, the European Parliament questioned Facebook founder Mark Zuckerberg on whether he should own Messenger and WhatsApp in addition to Instagram. Yesterday, Facebook claimed that there are many consumer benefits when it controls such a large part of the world's communication platforms. When Facebook sees spam, exploitative images, or illegal content, for example, it can obliterate it all on all platforms simultaneously. This may not be enough to make European regulators happy, but they spent quite a bit of time during Tuesday's hearing critiquing the social networking giant for not being effective enough in treating harmful content. The question still persists whether tech titans like Facebook, Amazon, and Google should be broken up.
These are the 5 most valuable companies in America. Notice anything? They're all tech companies, and their dominance is attracting attention from watchdog groups that say their market power is harming competition and the economy. Is it time to break up big tech? To answer that, you have to understand how tech has exploded. For our purposes, let's imagine the top 5 tech giants as Pac-Man or Pac companies. Except in this game, there are no ghosts around to avoid. No Blinky, no Clyde. Those ghosts are US regulators. For the past decade, the US has been mostly hands-off with big tech companies, letting them become even bigger by swallowing smaller rivals or entering new markets. Bloomberg data show that in the last 10 years, the Big Five have made close to 500 acquisitions worth about $140 billion. Because consumers like the company's products, Amazon, Apple, Facebook, and Google have developed monopoly-sized market shares. For example, Amazon receives about 93% of all ebook sales. Google pulls in about 78% of internet search ad spending in the US. Similarly, Apple and Facebook dominate in smartphones and social media traffic. But being a monopoly isn't illegal in the US, or most other countries. Regulators stopped equating big with bad a long time ago. Monopoly cases brought by the US have also dwindled. In fact, the last high-profile case was filed in 1998, when the Justice Department successfully challenged Microsoft's dominance of computer operating systems. And that 20-year dry spell in monopoly cases has led some watchdogs to say that enforcement in the US has become too timid. They say big tech is hurting innovation, jobs, and wages, and some even blame the behemoths for a decline in successful startups. In Europe, America's big tech companies have faced more resistance, with governments more aggressively pursuing them. For example, the EU has fined Google for abusing its market dominance, and Germany is investigating Facebook for its privacy practices. Of course, the big tech players don't think they need to be broken up. They argue their dominance isn't guaranteed because new competitors can easily jump in. As Google likes to point out, competition is just one click away.
The wireless networks of tomorrow will be incredibly fast and capable of accommodating many more connected devices. Bloomberg's Quick Take explains what 5G is and how it's going to change your life.
5G stands for fifth generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more. But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
Back home, the situation remains tense in Tuticorin. The local administration has now shut down internet services and telephone network remains patchy in the area. The state government has transferred some senior police officials to try and assuage the protesters. The opposition parties don't seem to be relenting though, with the DMK leader MK Stalin and others trying to make a beeline to the area. Meanwhile, Vedanta Group Chairman Anil Agarwal has put out a video message saying Sterlite will not violate any law. Agarwal also has said that they aim to ensure that the locals are on board before the plant is restarted or any expansion plan is drawn up.
We are waiting for clearance from the court and the government to restart the plant. And we are strictly following what court and the government orders are. We always make sure the community and the Tuticorin people at large prosper with us. I am totally committed for the community, people at large, and with their wish and with their prosperity, we would like to continue this business.
Anil Agarwal of Vedanta. Well, out of time on this show, but coming up next is higher sales could not cushion Tata Motors' performance for the fourth quarter. Sajid is in conversation with the company's group CFO PP Balaji on the other side.